Wealthi Experts, where we are bringing on experts in their field to help us build effectively a wealthy life. Hello, everybody. This is Domenic Nesci, and welcome to another episode of the Wealthi Podcast. Today, we're going to be doing a market update for the Melbourne market, and we have none other than Ben, the founder of Branson Group. Now, Ben has been working with us for a while now and has actually been running this business for 20 plus years. One of the reasons why I love working with Ben and his team at Branson is their attention to detail, the quality work that they do, and the projects that they deliver. Year after year, their projects are growing. He's very strategic in the assets that he purchases. And some would say he has the Midas touch when picking these right developments. So I feel very safe working with him and his clients. Ben, thank you very much for joining us on the show today.
Thanks for having me, Dom.
It's an absolute pleasure. I can see that you've got your turtleneck. We had a chat about it earlier. It's obviously a little colder down there than it is up here.
It's definitely a little bit chilly in Melbourne, that's for sure. But born and bred here, so I don't know why I complain. I'm well used to it.
Well, excuse my Friday shirt. I'm living near a lake now, and I'm trying to channel those Friday vibes.
It's all good.
So tell me, I mean, we don't want to talk and dwell on this too much, but how has COVID sort of impacted your market this time around? I mean, last year it was a tough time. You're locked up for a while. We saw that the listing rates came down, the amount of volume came off, but then as soon as you came out of COVID, there was a huge amount of pent-up demand. People had saved their money, listings came back, and you saw the market came back with a vengeance. What are you seeing or feeling this time around?
Yeah, that's right, Dom. I suppose mid last year was definitely probably the toughest of the whole cycle through COVID. But the minute we got out of it towards sort of, October, November and leading into Christmas, the pent-up demand was absolutely huge. So we launched 4 projects just before Christmas and had an incredible response right through Christmas into the new year and still to this day. But you're right. The pent-up demand and the lack of supply, or even, I suppose, good stock within the market is very few and far between. So we've been very fortunate to have the right type of product in the right type of areas. Obviously, you know that we focus very heavily on the middle ring suburbs of Melbourne, and particularly the inner north and the inner west. So that medium density townhouse stock has been, traditionally always very well received, but even more so lately.
And can I ask you, because for all of you out there that are listening and watching, Ben does specialize in that middle ring in the north of Melbourne, and they specialize in what we call, or what the government calls, the missing middle. Normally, developers go out, they do house and land subdivisions, far out west, east, north of Melbourne, or they do lots and lots of apartments. Ben has been very strategic and cornered a part of the market that we see and the government has seen as a huge opportunity for people, where you can deliver beautiful quality townhouses in that inner ring in strategic locations. Have you noticed that that townhouses have performed as well as houses, or would you say you'd put them closer to apartments, or where would you sort of rate a townhouse's performance relative to houses and apartments?
Well, I suppose given that we've got such a huge vested interest in the townhouse model, it's definitely not anything that we'd compare to an apartment. It's definitely following the house price a lot closer than the apartment follows a house price. And especially because we're putting product into typically $1 million plus suburbs. So, for instance, you're putting in a townhouse in Espanol with a median house price of 1.5 million, and typically the stock's at least 20, 30, 40% under that median price. So the units and the resales have been incredibly strong. For instance, we had one reported in one of our projects called 16 Degrees North in Preston. And now I went into Preston around 5 or 6 years ago and everyone thought, I think he's gone mad. Who's building townhouses in Preston? And no one had heard of it. But we went in there and saw the suburb was gentrifying and saw the young families and the mums pushing the prams and the really strong fundamentals that the suburb had. Of 16 townhouses in 2000 and late 15, and I think it settled in 16. Those townhouses were sold for $599 off the plan. We just had a resale, I think a month or two ago, for $760,000. So people are doing very, very well investing in the townhouse space.
And let's talk about that a little bit more, because I've bought into this model. I really do believe in it. What you've done there is very strategic. You're buying in these emerging or blue chip suburbs. So they're either areas that are affluent, where you've got a median house price, it's $1.5. And let's just talk about even Essendon. You've got houses that are selling there for $5, $10, $15 million. So it's a very affluent, old money suburb. And what you're delivering and giving clients is land content, but also a piece of real estate that fits within the culture of the area. And it feels like you're arbitraging the price between a house and delivering a similar sort of feeling as a house, but without the budget that comes with it. Do you attribute a lot of the growth because of that? Is that how you're thinking about it?
Well, definitely good analysis of it. But I suppose, the one fundamental is that our product has a secondary market. It's not just a secondary market for an investor. The product's suited to a huge pool of buyers. So if it was to be resold, it's not only looking for an investor like many apartments are. It'll attract a downsizer or a first home, second home. There's many people looking to buy these types of products. So, and they're designed, I suppose we're going to, the top of town architects, working with the best designers in the country to come up with products that are suited to that in particular market.
And how do you, Melbourne hasn't performed as well as many of the other states. Do you anticipate there being, even more pent-up demand, or do you think that there's a bit of catch-up to do in the Melbourne market? Like, do you see it as almost undervalued relative to everybody else?
Well, I suppose definitely if you look at your market, I think we're undervalued by miles. So, and it depends what you compare it to, but the affordability, I think, is the key factor. Is trying to deliver the product that we aim to deliver with, the right design and the right quality at the right price. So, and not becoming a cookie cutter type of product. So I think there's still scope for growth, huge growth.
So generally speaking, we think that there is scope for growth in Melbourne, and talking about, the product more specifically to our clients, listeners, and the people that are out there. What are some of those key factors that you attribute to your success and the business's success in choosing the right product or the right area, but then also delivering the right product for the market? What are some of the key criteria that come into your mind that, our investors and the people out there listening should think about?
Yeah, so look, we do have a very stringent set of guidelines when we're looking for sites. And obviously everyone knows that there's certain fundamentals that you need to be looking for, such as infrastructure and the transport and the schools and all these sorts of things. But we're also looking for, and you've seen our ripple effect chart, Dom, which we're really getting people to buy into now is what's the next suburb? And when once one suburb has, I suppose, peaked and run out of steam, what's next? And which is the adjoining suburb, or what are the next suburbs out? For instance, now we've been in Essendon for 20 years. We've done dozens of projects here. So, what's next? So now we have sites coming up in Niddry, for example, and Pascoe Vale South. So we're looking at that they still have all those fundamentals of, trains, trams, private schools, the best private schools in the north. So we're looking for What are those drivers that are going to keep delivering the results for our customers and your customers?
What I like there is that, you're right. There are some very obvious things that people don't pay attention to. And that's, transport infrastructure, schools, the local center where the cafes, the bars, the restaurants are. But I think what has worked well for you is you've been a bit more forward thinking and courageous enough to go to the next suburb, where a lot of people won't do it because it has a stigma or they think that it's not quite there yet. I'll use a quick anecdote. When I spoke to some people about Reservoir, they said, one of the friends of mine said, well, that's depressingly suburban, right? And I can already see that in a short time, in a year or so that we've been working there, that it's changed immensely.
Yeah, I'm glad you raised that point, because I had the exact same thing said to me when we went to Preston, in 2014. We'd done projects in Fitzroy North, Northcote, many projects in Northcote. We went to then Thornbury, and you can see where we're tracking. We're tracking up along the northern corridor of St. George's Road. And then we went to Preston, and everyone said the same thing. And then obviously a couple of years ago, we started acquiring sites around the brand new train station that the government just spent $230 million on. And you only have to go, obviously, you guys are in lockdown, but you only have to go for a walk up and down Edwards Street and around the Edwards Lake to see how that suburb has gentrified. And as you know, we've just started settling the first 2 stages of our high street collection, and valuations are coming on the dollar. People are settling on time, no issues at all. So that just says everything about the suburb and what we've delivered.
But then at what point do you say that suburb's too far, or the ripple effect won't come into effect? At what point do you say that this anomaly that we've noticed that's been working for the past 15 plus 20 years, it almost feels like it's too easy, just following that northern road all the way up and watching this ripple keep on changing prices? Like, at what point does it not work, or do you think that surely that suburb's not going to work?
I think it there's definitely that point. There's definitely a point where if you went, people are already asking me about certain suburbs a bit further, and I'm still a little bit hesitant about where they are. They still need to have those fundamentals. I mean, you look at our Belmont collection, for instance, in Mill Park. I mean, it's La Trobe University is spending $5 billion. We had to triple check that figure. We were like, surely not $5 billion. Like, where is that money being spent? And it's correct. So as long as those key factors are there, then we'll just keep assessing them. And I don't think it's a case of just, keep rolling further out. I don't think it's just forever and a day.
Okay. So it isn't just keep on rolling out. It is about paying attention to what's actually happening in that suburb. It is, there's money being spent, the train station being extended, or you can see that qualitatively something is getting better, or it is changing in a way. Yeah.
And again, we relate a lot of this stuff back to the house price and what's the house price doing, and what are the small dual occupancies doing. Nidri is a perfect example of that. Where you've got people paying $1.4 million for a duplex. So, you can see that there's a gap for us to come and slot in.
Yeah, and come in under that price and deliver a good quality product.
Yeah.
Now, I just want to talk about this pretty briefly, because you go out, and I hope you don't mind me sharing, but you buy sites, and you're spending tens of millions of dollars buying sites very regularly. And you one of the things that you do so well is the acquisitions part. But I want to talk about this a little bit, is the supply of townhouses versus, say, houses and then apartments. And the reason why I like townhouses and why I like going for light land content is it's much harder to amalgamate a site, or well, not harder to amalgamate a site, but you get far less townhouses on an amalgamated site versus units. Can we chat about that a little bit and what your acquisitions and the supply constraints that come with townies?
Yeah. Look, I mean, you've heard Evan talk about this, very frequently with, different projects that we're obviously pitching. And you're right. When we're acquiring sites, I mean, we're usually going into. We've talked about the suburbs we're going into, but the other thing that's happened in Melbourne is that the zoning changes have had a huge effect on the medium density in the townhouse market specifically. Now, we're going into markets where there's absolutely limited supply of huge sites. So we're typically having to amalgamate multiple house blocks to come up with, for instance, a 2,000 metre block. Now, that's not an easy thing to do. So I suppose that this is where the success has been, is putting our product into, A-grade locations in with sites that basically you can't just replicate. There's not dime a dozen of the sites that we're purchasing. They're just not easy to put up. They're not easy to put together, and they don't exist in abundance. So it's just a demand and supply issue.
So talking about, say, a 2,000 square meter block, just for people listening, how many townhouses would you get versus how many apartments would you get? I know it's a big rule of thumb and it's hard to say, but just as an anecdotal bit of evidence.
It's a difficult question to answer because there's so many different things that you can analyze it with. But because we're going into they're generally general residential zone or neighbourhood residential zone. So they're not really ever going to be an apartment or a high-rise or a mid-rise development. Hence why we're going to, A-grade locations where the house on that street might be $2 million, $3 million. Lincoln Road, Essendon's our Lincoln collection's a perfect example where we've got townhouses at, $1 to $1.3 million. And there's houses in Lincoln Road that have sold for $5, $6, $10 million. So, the yield of our product is miles less. I don't know what as a percentage it would be, but if we're putting in 10 or 15 townhouses on a site, you might be able to put 40 or 50 apartments on that site if you could get height.
Yeah. So depending if it's close to a station, you might have higher height requirements. It could be 40, 50, or even a bloody 100. You just don't know.
Yeah.
But the multiples on a 2,000 square meter site or putting a site together for townhouses, you're getting far less density, which is a natural supply constraint on the market that you're picking in.
Yeah, that's right. So I suppose it's a more complex and difficult model to roll out. I mean, if I wanted to build 1,000 apartments, we could, but it's not something that we want to do. It costs us on average 4 to 5 times at least the site price to buy a townhouse site. So for every 100 townhouse sites we have, I could probably have 400 or 500 apartments.
Yeah. And delivering these days, is it getting harder? Is it easier? How has COVID impacted people like you when you're trying to build this stuff? Are the prices going up as people are talking about? Are supplies getting harder to get?
Yeah, look, we got upwards pressure on everything at the moment. Obviously, the land prices are being driven high, but also just the sheer supply of raw materials, timber, steel. We've just started construction out at the Belmont collection at 107 townhouses, and we're getting huge upward pressure on our delivery of timber, steel. We've changed to steel frames, and we're still getting huge pressure on that. So, whether it's us as a developer or other developers, everyone's having to rethink their costs because the square meter rates that we're able to deliver these things for is climbing by the day at the moment.
That's really interesting to know, because when you're thinking about it as an investor or a homeowner or whatever, it just simply costs more to deliver a house going forward. So what you're buying for today, a fixed price asset, someone buying that same asset in a year or two from now, is this going to cost 3, 4, 5, 10, 15% more?
Yeah. And this is why I think, people that are able to buy product from us off the plan immediately basically are doing well, because the next townhouse or the next project, wherever it is, whether it's in the same street or in the same suburb, physically won't be able to be priced at the same amount. So you're automatically making money.
Yeah.
By committing to something that's really 12, 18 months away.
Yeah, I completely agree with you. I don't think that competing with 5 other desperate homeowners at an auction is the way to go and score a good deal.
No, especially how it's so heated. So you end up paying, 5-10% at least, maybe more over the odds, and then you're waiting for growth to catch up. Whereas, these products, I can't keep delivering them for the same product, for the same price. Belmont Collection's a perfect example where that project and that product is physically unable to be delivered again at the prices that we've seen.
Talking about the Belmont Collection and talking about, someone listening to this or watching this may think, all right, well, I'll go buy a fixed price asset. I might go buy a townhouse or a house or whatever. But I want to point out that not all product is made equal. And the reason why you're on the show today and why I'm talking to you is because there is a level and attention to care that goes into your design and what you actually deliver. It may be just anecdotally, but even more specifically, can we just chat about, the differences in product and how you think design has, impacted, say, property prices and what it means for the end user or what it means for the person that's going to be buying it down the road?
Yeah.
I know that you're passionate about design and you're a trained builder and architect and been doing this a while, but can we chat about design and that a bit?
Yeah, look, it's a good point. It's a huge, obviously we've talked about with you guys specifically the 3 pillars that I suppose Branson's built on, which is the design, the investment, and also the quality. So the design component of, and also the quality of the product is hugely, hugely important to us. And I know you haven't been able to come and see the High Collection. We've literally just finished as we speak as a finished project yet. But the things such as the communal areas that we've put in, the barbecue spaces, we've got a fire pit there. We've got catenary lights, which look incredible. We've got click and collect lockers. It's fully secured. They're things that you just don't expect to see in townhouse projects. They're things that you might see on a 300 or 400 apartment high-rise tower on the roof with residence amenities, not in a 15 or a 20 townhouse project. We've got herb gardens. We've got all sorts of things happening there that just help the residents. So whether it's an owner-occupier or it's an investor, it just attracts more people to want to live there.
But even within the townhouses themselves, I saw a really good article the other day. A gentleman bought a townhouse and the way that it was designed, there was poor light. The kitchen was in the middle of the living area. There was walls up, so you couldn't see the backyard. They spent about $120,000 redesigning the kitchen, opening it all up. There was a lot more breathable, a lot more natural air, and they ended up selling it for $300,000 or $400,000 above reserve. Now, what I like about your product again, and I hate to feel like I'm just tooting your horn, but not all apartments, houses are designed equally. And what I found in a lot of the product that you're designing is it's very well considered. It's as if it's a kitchen made for a chef, or you've got proper entertainment spaces, or the island benchtop has been delivered in a really tasteful way. It's very space conscious, very aware of a tenant is going to live in there or an owner occupier is going to be in there. So there's lots and lots of storage, which, it feels like you try to squeeze in a cupboard wherever possible. And I just want to know, was that a very deliberate thing from you guys and the team you work with?
Yeah. Yeah, interesting what you talked about, the storage, for example. That's something we've been refining every time. And I haven't got any photos to share, but that project we talked about in 16 Degrees North, I mean, that was sort of the start of when we really started ramping up huge amounts of storage in our townhouses. And we're finding people love it. Now, whether it's storage in as linen cupboards, or we're putting in pretty much every project now has shaving cabinets above the vanities in the bathrooms, in addition to obviously underbench cabinetry. So we're really thinking about who's going to live there, how they're going to live there, and obviously making sure that they have all those sorts of things ticked off. So they're all the little 1%ers, I think, when we walk through, when we show people through our product, whether it's the tall doors. So we typically have a 2400 door as opposed to 2100 door. They're noticeable things at 2400 windows, taller ceilings, 2700 ceilings. So they're all little things that add up to a lot when you walk through the product.
Yeah, they're really good design consideration for the people that are out there. It's all the subtle touches that you may not even see visually, but you feel it when you're there. Now, I mean, Ben, where are the opportunities in the market? Where would you be investing around less than 800,000 at the moment? What would you be out there buying? Where do you think's undervalued within the Melbourne market? Where do you think people should be putting their attention to?
Yeah, look, I think the middle rings, and this is obviously where we operate, but we think that the middle that we talk, as you mentioned, the missing middle is something that's been spoken about for a long, long time, and there's just not the supply being released to that market. So the inner north, the inner west of Melbourne, you got to remember that you're sub 10 kilometres from the CBD. You're ticking all the boxes from amenity perspective. Obviously, we've spoken about infrastructure and government spending. Our projects in Pascoe South and Nidri, they're $850,000 products, between 7 to 10 kilometres from the CBD, next to the best public and private schools this side of town. So I think from an affordability perspective, you're going into Nidri as an example, where its neighbouring suburb has a median house price of 1.5 million. These days, you can barely buy a knockdown in Essendon for 2 million. So, if you're buying a townhouse for 8s and 9s or sub $1 million, I think in the short to medium term, you're going to do very, very well.
And do you think, while we're on this topic, I've always been tempted by, even spending more than 800K, but do you think that you could effectively spend $1 million on a nice townhouse or a nice product and it be a good investment?
Yeah, we've seen that change over the last couple of years dramatically, where typically we wouldn't see investors buy $1 million plus townhouse. It's definitely changed. So we've got multiple buyers now in that $1 million to $2 million bracket. Seeing value in these sorts of suburbs.
Okay. Well, Ben, I don't want to take up your time. I know that I'm very, very gracious for you spending this time with us. I've got two more questions. One's a bit of a random one. Do you think the Melbourne prices will ever catch up to Sydney?
Oh, I'm not sure if I want to go on the record as saying that. That could be very, very risky.
Okay.
I'm not sure how to respond to that. I'm a Melburnian, and I'm talking to a Sydneyite, so I've got to be a little bit careful there, Dom, too.
No, say whatever you like. I mean, if given enough time, anything's possible. But I'm interested to hear what you genuinely think. You're a well-traveled man. You've been all over the world, and you can value a city. The population growth in Melbourne has suffered recently, but it is going to outstrip Sydney, or may recently have had. And, when the borders open up, we're going to see a lot of migrants. We're going to see a lot of students. We're going to see tourism. A lot of things are going to change. Do you think that if given enough time, maybe in our lifetime, Melbourne will beat or outstrip the Sydney market?
Yeah, look, I'm not sure about where that will lie, but I think what I can hand on heart say is that, when all this dust settles through COVID, and like you say, we get the migration back, we're not going to be talking about buying $800,000 townhouses within 10 kilometres, even 20 kilometres of the city anytime soon. So you know yourself how far out you need to go from the Sydney CBD to be able to buy something at even $1 million. You're a fair way out. So I think people that are buying where we're operating in those middle rings with all the key drivers, they're going to be very, very well placed in 5, 10, 15 years. So, yeah.
I'm with you. All right, last question. Any hints, tips, words of wisdom, maybe something that you've seen, experienced, a good restaurant, a book? What's something that you can leave our audience with that recently captivated you and you want to leave with all of us?
Oh, and does it need to be real estate related or not?
No, anything. It can be just something that you ate or something that a TV show you watch. Watch something. Leave us with some value. I can go and do today.
I've jumped on the Wim Hof bandwagon. I'm not sure if you've heard or seen him.
Cold showers, breathing.
Yeah, all of the above. I think it's actually incredible. He's an amazing guy, but his techniques and some of the things he talks and preaches about. If you went and started doing cold showers, for instance, most things take time to see benefits from. But I tell you what, the cold shower thing is actually incredible. So if you haven't seen Wim Hof or read about him, it's incredible. He's very very inspiring.
Oh, it takes some courage to go and do some cold showers in winter in Melbourne. I tell you what. So if you're doing that, my hat's off to you.
Yeah.
And I agree. If you do have a cold shower, it changes your life and it does get better over time.
It does.
Ben, thank you very much for your time today. To all of you that are out there listening, if you've got any questions or things you want to say or disagree with what we have to say or comments, leave them in the comments below. Subscribe, like, all that fun stuff. And I hope to see you all soon. Thank you, Ben.
Thanks for having me, Dom.